Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we saw on Friday to end the week. Global shares ending at a record level, buoyed by market optimism over signs of progress in US-China trade talks, with President Trump saying he doesn't think he'll need to extend the July 9th trade deadline he's imposed on his trading partners. However, Canadian-listed stocks turned negative after US President Trump terminated trade negotiations with Canada. And Wall Street extended its rally on Friday, sending the S&P and Nasdaq to all-time closing highs, although the breakdown in a US-Canadian trade deal saw stocks pair gains, while risk appetite was further dented where President Trump said he would consider bombing Iran again. For the week, the S&P gained almost 3.5%, the Nasdaq 4.25%, and the Dow climbed close to 4%. Consumer discretionary stocks enjoyed the largest percentage gain on Friday. Energy shares were the laggards, and among the Mag 7 stocks, Nvidia rose, edging closer to a $4 trillion market capitalisation, making it the world's most valuable company. Chip maker Micron's upbeat forecast revived investor confidence in AI-related stocks, and Nike shares surged after forecasting a smaller than expected drop in first quarter revenue. Meanwhile, the forecast for second quarter S&P earnings has increased in recent weeks, with analysts seeing growth of close to 6%, according to LSEG data. Well, the Republican-controlled US Senate has advanced President Trump's tax cut and spending bill that would fund his immigration, border tax cut and military priorities. The legislation is vehemently opposed by Democrats, while two Republican senators are also opposed because it would raise federal borrowing limit on $36 trillion US debt by an additional $5 trillion. Meanwhile, President Trump has said he is ending trade talks with Canada in response to the country's digital services tax on tech companies. And President Trump also criticising Iran's supreme leader and dropping plans to lift sanctions on the country, and said he would consider bombing Iran again if Tehran is still enriching uranium. And the latest US data shows personal income unexpectedly fell in May, down 0.4%, spending falling 0.1%. The core PCE deflator was up 0.2% month on month at an annual rate of 2.7%. And consumer sentiment rose slightly, with 5 to 10-year inflation expectations slipping to 4%. The US 2-year Treasury yield was around 3.75%, the 10-year close to 4.25%. And the US dollar retraced earlier losses against the euro after President Trump ended those talks with Canada, sending the Canadian dollar sharply lower, the Aussie trading at 65.3 US cents. And Bitcoin is above 108,000 US dollars. On the commodities front, oil prices recovered from earlier losses on Friday following a report that OPEC Plus is planning to hike production in August. But crude tumbled around 12% last week as the war between Israel and Iran came to an end. Brent crude futures at $67 a barrel. Copper was little changed on Friday. Iron ore up around 1% to $94 a tonne. And gold fell below $3,300 an ounce, near a one-month low, after a US-China trade agreement boosted risk appetite, with bullion losing its safe haven appeal. Let's get more now on what we're seeing in India. Mugunthan Siva joining us from India Avenue Investment Management. Mugunthan, good to see you again.
Likewise, Andrew.
What's going on with trade talks between India and the US?
Well, it's been a little quiet at the moment. Obviously, as we know, a few months back, Modi Prime Minister Modi travelled to India, met with Donald Trump, and JD Vance went to India. There was discussions that were progressing at quite a speed. We think that it is one of the free trade agreements that's on the agenda, but there's obviously quite a lot to negotiate between the two countries.
Is it fair to say that because India's economy is fairly insulated, that it has, I guess, not seen the greater effects of that turmoil from Trump's tariffs?
To some degree, yes, because most of the growth, India's growth path or GDP composition is driven by services, and a lot of that is localized demand. So it isn't a significant exporter of note yet. On the agenda is to become a more significant exporter, but at this stage, the machinations and discussions of global trade hasn't deeply impacted GDP as yet.
Overall, what are we seeing with earnings? I guess how that's reflected on the local stock exchange. I see that the Nifty 50 hitting a 1 month low mid-June. Well, that was obviously coincided with that attack, US attack on Israel. But it's about 2.5% away from all-time highs?
Yeah, I think the all-time high was set in late September last year, about 26,300. We're not far away from that. We've had a significant rally from, say, March this year to early June, and that was driven as earnings showed signs of improvement in the March quarter results.
What are we seeing with earnings? Look at the MSCI India Index trading at some 23 times estimated earnings, which is one of the highest globally. What's expected from earnings growth?
Yeah, so if you rewind from FY20 to FY24, we saw about 20% annualized earnings growth. That took a breather for 2 quarters, really, where earnings was flat to slightly negative. And we only saw the resurgence of earnings really towards a level of expectation of 10 to 15% going forward in the last quarter, which was the March quarter. So the expectations are today FY26 will be somewhere in the low double-digit growth range.
I also note, analysts saying that because India has limited exposure to those emerging themes such as AI, global investors are perhaps reallocating to what they regard as more promising Asian markets, sort of South Korea, Taiwan.
Yeah, we've definitely seen that more recently with Korea and Taiwan being some of the strongest markets in June. And I think, from a global investor's perspective, it makes sense to split your allocation across regions where you might be seeing more exciting developments in areas like AI, and split also towards areas where you're seeing development from local demand. So I think that's where the money keeps interchanging the direction of where it's going. I think India's case is very much, the impact on earnings should be relatively minimal from a global perspective.
Now, company-wise, you've got to focus on Mahindra. What are you seeing there?
Well, Mahindra, everyone foreign investors particularly like to look at stocks which give you an India play. And for us, this is really one of those companies. Over the last, since COVID, it would have increased, market cap has increased 4 times, and its price has increased from 3.5 to 4 times what it was. This is simply being driven by participating in EVs, adoption of EVs, building cars from ground up rather than just converting existing models into an EV model. Partnerships with groups like Volkswagen, BYD in areas where perhaps technology has not caught up yet in India. So those partnerships are enabling faster progress. Additionally, Mahindra is the world leader in tractor manufacturing with 15% market share ahead of the likes of John Deere and Kubota and so on. They also are participating significantly in a surge of SUV buying in India. So as people sort of move up the curve of wealth, SUVs have been all the rage in India. So Mahindra has participated through a new look models which are, rather than purely built for value, they also look quite attractive.
So EVs, SUVs, tractors, are they serving mostly the domestic market, or how much is that focused on exports?
So increasingly it's now export growth as well. So Mahindra is quite present in Australia with 70 odd dealerships across the country. And I think its focus is not just to grow through India's population, but also areas like in the US, Middle East, Australia, and so on.
All right, so overall, you're bullish on the stock then?
Yeah, we've owned a stock for that 5-year period. The other attractions are it also owns one of India's largest IT services firm called Tech Mahindra, which has gone all in on AI. It owns over 35% of that company. It also owns 50% of Mahindra Financial, which tends to finance the tractors and rural and semi-urban. So one of the reasons we like this stock today is because there's been significant rate cuts, 100 basis points in the last 4 months, should be positive for consumption. And it's a broad play on urban as well as rural. And in rural, we're seeing a good monsoon starting already. And, these rate cuts should be beneficial to both those regions.
All right, so overall you're saying it's a bellwether for the Indian economy?
Yeah.
All right, which is looking up in your view?
Correct, and we've got the festival period and Diwali coming up in the next 3 months. So rate cuts, festival, earnings improvement should augur well for a stock like Mahindra.
Mugunthan, always terrific to get across what you're seeing in India. Thanks for joining us on India Avenue Investment.
Thanks, Andrew.
Let's come back home then. This is where we're likely to start, marginally higher. So SPI futures up just 5 points. Stay with us because we're going to get right across that in just a couple of minutes.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.